Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Monday, the 23rd day of December 2013, and this is the daily report for gold and silver. We have the precious metals pretty much across the board trading off or lower this morning with the exception of silver. We'll get to that in a second. To gold first. As you can see, we are back below $1,200. Off about $4.50, roughly in that area. Current print is $11.98, $11.99. Bid-ask spread, as I said, puts it down off a couple of dollars on the day. Silver trading quietly higher this morning, 1943 current print, high 64, low 25, and as I said, up a couple of cents on the day. Traders, as we go into the holiday season, a day before Christmas Eve, of course, we are looking at an extremely lightened volume in the market. Nonetheless, the pressure is still to the downside. We saw the market close just at or around 1,200 on Friday. And as you can see, we hit these lows last week, lows coming close to the 1180, but we haven't hit them yet. And then kind of trade up off of there, whether it was short covering or a little bit of bargain hunting. But the key and what I'm pegging as our current resistance right now has got to be at around, call it 1201 to about 1211 in the marketplace itself. And that's this previous low that we had at 1211. Of course, as far as I'm concerned, as we wind this year down, I am looking for lower pricing. But the $64,000 question, the big question right now is our current low that we hit. This is the 1181 right here. Without a question of a doubt, we can see that it hasn't quite gone through that point, and it hasn't even tested to see if this will be a supportive area or an area in which we see it break through. If it does break through, my belief is it will break through with a substantial amount of energy because we do have this bottom in place right now. If that doesn't hold, it's going to go to the next logical resistance area. We can talk about that in the upcoming shows. To me, the biggest indicator that we really want to look at through the end of this year and the beginning of next, of course, I believe is the equities market. This is the Standard & Poor's. We can see that it's raging on new highs, 1828. What I have boxed is simply the last year in trading in the Standard & Poor's 500, the equities markets. And we talk about on my Outlook 2014, I sent a link out this morning, of course, to see that really the key divergence that we had as this equity market was a runaway freight train, much in the same way that gold was as it went to 1900. We're seeing the equities now filling those shoes, so to speak. And I think that as long as the equities are on fire, we could in fact see the metals continuing under pressure. Now, in terms of key levels to watch, I've put up our half-a-day standard candlestick chart. You can see that we're now forming some sort of congestion, and with the holiday season quickly approaching, I don't want to draw too much out of that because we don't really have a tremendous amount of volume. But what we are noticing is that we are, although trading under 1200, we are trading really ahead or above this support level of 1181. And without a question of a doubt, we have some real resistance, which really comes in right at around, call it 1210, 1211 in that area. So our real resistance right now has got to be 1210. Our real support right now has to be at around 1181. Now, we are looking at a 3-day chart, standard candlestick format, do have our current Elliott wave count. This wave count that I've been looking at has really been what's called the intermediate. There is a major above that and then a grand cycle even above that. And I kind of want to touch base a little bit in terms of possible major counts because as the market stays above this 1154, when we look at the major count, there's a couple of ways we can actually create models off that. We'll talk about that in a second. But what we're looking at right now in terms of where we think this market's going, wave 1, wave 2, long wave 3, we've completed 4, and I still believe that we are in this last 5th wave down. I believe that we haven't washed out the lows yet. We, of course, will have to see if, in fact, the market begins to drive down and touches upon 1181 to see if it actually holds there or goes through. My sense is it will probably go through, and my belief behind that is in terms of pricing itself, 1154 is one area that I want to look at. And my sense is even if we do see continued downside pressure, I would look for a stabilization anywhere between, call it 1090 and 1154. And that's in terms of a prognosis, that would be the most bearish of all of our models that we are currently looking at. But as I said, I have not received any kind of technical confirmation that as of now, we've completed this 5th wave. Now, as I mentioned, we always have been looking at the intermediate count. That's this ABCX 1, 2, 3, 4, 5. Above that, of course, is a major count, and then there's a grand cycle that's even above that. But the major count is something that each wave itself takes quite some time to actually unfold. And really, to illustrate that point, I've pulled up a weekly chart. It is in Japanese average, but we're not really looking at the chart as much as these grand moves. And when we look at it through this eye, here's what I'm looking at as a major first wave, second. As you know, it's been my belief that we have been in a major third wave, which took us to the top, and then a major fourth wave. However, we went into this bear count within this bullish cycle, and right now we are absolutely in a bear market. But when we look at the market through this timeline, and you see this 1161, that's a 61% retracement, and it is a retracement of this large move, 700 up to 1900. When we do that, there is a case that can be made for the following model. We've had major first, major second, a major third. Now, on our major fourth, that is being composed of an A, a B, and a large C. C terminates somewhere around 1161, and we could actually then go into a major fifth wave. Major fifth wave would take us to new highs. Now, that's one model, if we really step back and look at it, that's plausible. It's hard to really digest that type of a model when we have just come out of the most dramatic price decline we've ever seen in gold, just in terms of a single year, and the amount that it dropped in terms of price. Even in percentage, it's a tremendous move down, but in terms of price, it's the most dramatic move down we've ever seen. So to look at any kind of a bullish model right now, it seems counterculture. It seems almost as though it isn't possible. But when we do stand back and we look at the market through these eyes, it is something that I think at least warrants our attention. Now, members, one thing I did want to touch upon before we talk about silver for a couple of seconds, and that's there's, as you'll probably notice, some great changes that are really coming out in the website itself. We are building out the members portal right now with enhanced features, and one of the things that we've done, it's been needed for a long time, we've always had you have the ability to, of course, view the daily report, the opening letter, the forecast, proper action. But now what we've added is what's called recent videos. If you click on that tab, what you'll find is these are posted roughly when the next video comes out, so you'll always be able to go back, look through the week, and if there were any questions or if you wondered what was said during that particular video show, you're able now to simply pull it up, and that's under recent videos. You're going to see a lot of changes as we go into next year. We'll be doing them really between Christmas and New Year's when we go to a shortened schedule in terms of our daily reports. And then lastly, in terms of silver support and resistance area, market's currently at 1944. This is a straight Japanese average. Let's go ahead and convert this back to a true open and close with a standard candlestick so we can see really the range, very, very light range here. I do believe we have resistance at 1958. Support right now is at 1890. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.